Rohit Srivastava, founder of Strike Money Analytics and India Charts, is joining us right now. Hi Rohit, a very good afternoon, and thank you so much for your time. First up, help us with your take on the benchmark indices. Seems like a decent start to the calendar year 2025. So where do you see the markets headed? Because of late, the markets have been under pressure, and people are highlighting that the trend is actually downwards. But help us with your take on the benchmark indices.
Yeah, so I do think the trend is down. First, let me wish you a very happy New Year and to all your viewers as well. And this is typically period where you see very little volatility because of New Year's. Today, most markets being closed. Having said that, we have bounced off to the next critical resistance in the short term, which is at around 23,780. So unless that level is really surpassed, I think the upside may be capped over there. If we do cross that, then there will be a possibility of going back above 24,000. But I would my bias would be towards that not happening. Possibly the move down would resume from here, and you see selling pressure build up again. So on the downside, then we'll again look at retesting 23,200, the lows that we made last month. And if that breaks, then possibly go towards 22,800 is what we are looking at on the Nifty.
Okay, point taken. Rohit, hi, Anisha also joining in the conversation, and New Year's greetings to you. But within the auto pack, is there any stock which is a bit of an outlier and showing strength, or would you recommend just staying away from the sector right now?
No, we are still staying away from the sector. I think the only sector that is showing any kind of strength over the last 10 days or so has been pharmaceuticals. That has outperformed in a much clearer way. And so it might remain, that way as, a lot of funds that are coming out of other places go into the defensive pharma sector. So that's, I think, the only place. Autos have been weak. I don't see any reason why they should suddenly become much stronger. There's no clear sign that is happening. So possibly you're going to continue making lower lows and lower highs in the auto stocks as well.
Can build more in within the auto space, but Rohit, in the last calendar year and especially in the second half, we have seen that the FMCG names have been under pressure. So any stock that is showing signs of reversal here, or would you still believe that stocks like Dabur, Marico, HUL can continue to be under pressure?
Yeah, so usually, when we speak of defensive, I spoke of pharma, and the second thing you'd think about is, why not FMCG? But for some reason, maybe because of the high valuation backdrop, the selling pressure this time in FMCG stocks has been far more intense than what we have seen in many, many years. And that is the reason why it's not coming into our picture, even though we can say technically that some of these stocks over here are oversold, some of them are showing positive divergences for a pickup, but we are not getting the follow through, and that is why it's not coming up on our list. So that's just how it is. It remains one of the weak segments still. I don't know if it will pick up, in the face of even further selling pressure, or will it decline with the rest of the market? Because the market itself doesn't look ready for a big move up. The question is, can FMCG play the same role that pharma does? Not very sure, really.
Yeah, not really sure, but the pharma has been the outperformer, while FMCG the stark underperformer at this point of time. What about IT as a pack? Would you recommend any positioning ahead of the earnings season, or just go in light?
So IT has outperformed significantly again earlier. I think till the 16th of December, it was making new highs. But what we have seen till yesterday is a break of its trend line from the entire 2024 period. I think from June, if we just take a trend line of the June bottom to the November bottom, that actually broke 2 days ago, and we are still watching that because it's trying to bounce back. And if it doesn't really get back above, say, 43,400, that's the Nifty IT index, then we are looking at further downside on the IT sector. This would also coincide with what we are seeing is a renewed selling in US tech stocks, because the Nasdaq has actually been down for the last couple of days, and that would also continue to push the IT sector lower. So not really willing to take immediate bets on IT sector, even though the result season is right ahead. But I think we would stay cautious here as well.
Cautious within the IT space as well. But Rohit, any sector you believe that could be in for some more correction and where fresh trade can be initiated? Because all in all, what we are getting to understand is that you're not very positive on the markets and feel like that the correction could be more within the benchmark indices as well as select sectors can continue to be under pressure. So any sector that you believe that that still has some more scope of getting into that downward move?
Yeah, I think it's showing up in metals. The consistently rising dollar is pushing down commodity prices. Yesterday, we've seen a new low in copper prices as well. So I think the metal stocks will continue to face the heat. So that is one sector which still has a lot more downside to go. Within PSU stocks, also, I think we are not completely done because there's been a lot of rotation. Some PSU stocks probably have fallen a lot more, but there are others which are just starting to decline. And therefore, I think even PSU stocks might, give up further gains in the days ahead.
Whether they give up gains or build on to gains. But Rohit, thanks so much for joining us on the first day of this year, 2025. But
If you like this video, then like, share and subscribe to ET Now.